straight away cut across to NITI Aayog's Vice Chairman Arvind Panagariya in conversation with CNBC-TV18's Shereen Bhan.
The scale. I mean, why China today is at $2.3 trillion worth of exports is so successful. Scale. It's a scale. And unless you go to the world markets, you are not in
I agree, and that is something that entrepreneurs need to focus on. But what about the government? What can the government do beyond, tinkering with the foreign trade policy to try and boost India's share in the export basket? Again, in this context of Brexit, people are seeing this as an opportunity for India because we can now negotiate directly, perhaps, with the United Kingdom. But what do you really see as being the opportunities and the need for intervention from a policy perspective?
No. I think that, one needs to reduce risks in the market. So, we suffered for a long period from a lot of uncertainties that come from the governmental policies as well, and the other risks too. So we all, need to work together to mitigate those risks, get the foreign investors also. The bigger opportunity I see coming is that China now the wages in China are rising. They have actually risen over the last decade and a half. The workforce is not declining. It is on the declining side of the demographic curve, and it's declining quite sharply. So the wages in the forthcoming decade in China are going to rise even faster than they have risen in the last decade. And that would, of course, it is already doing it, cause many of the sectors that use a lot of labor migrate out of China. It is happening right now. I think they're going to Vietnam, they're going to Bangladesh, even Myanmar, but not enough to India. And I think that's what we need to change.
One of the risks facing the Indian economy specifically is the poor efficiency of the public sector. Public sector banks are burdened with NPAs today, much higher than the global average. The NITI Aayog has been tasked with putting together a list of candidates for strategic divestment. I understand that the first and the second list perhaps has already been presented to the Prime Minister. So when can we realistically expect a strategic disinvestment to take place?
Yeah. So there are two issues. So one report we did was about the closure of the sick firms, firms that are not performing and have had repeated failures of revival. I think they need to be closed down. So that's one list. And the other one is to strategic disinvestment. So you'll see action happening in the next 6 months, I would say, meaning that process is on. But you will see the action happening within a matter of about 6 months or less.
So we will actually see a strategic disinvestment take place in this financial year?
Count on it.
Count on it?
Count on it.
How many candidates are up on your list for strategic divestment?
No, this is an ongoing process. So, if I say it's X number today, tomorrow it'll be probably 2X, and after there will be 3X.
But give me a ballpark, sir. How many have you already identified?
No. We have identified enough. I think it's really, the process itself is longer and more difficult. So it's not an issue of how many we have identified, but how many can the government actually really proceed with and push through.
The Civil Aviation Minister, Mr. Gajapati Raju, was having a conversation with me, and he said that taxpayers cannot in perpetuity fund Air India. Do you believe that Air India as a candidate should be put up for strategic divestment?
What I would say is that there are a lot more much lower hanging fruits where we have to go first. I think, the last strategic disinvestment that happened, privatization
in NDA-1.
NDA-1 and 2002
Hindustan Zinc, Balco,
right? Balco, etc. Yeah, so it's been 12 years that not one has happened. So it requires a bit of confidence building also. It requires setting up the processes. And so you have to first go with the lower hanging fruits, and then we'll see where the process leads us.
So you said that we should be prepared for more reforms. I know the GST is going to be the big one, but that will depend on what happens finally with the math in the Rajya Sabha and the government's ability to get the Congress party on board to push the GST through in the next session of Parliament. But what really is left on the reform agenda that we could expect now? Because the sense one gets is that these mission mode sort of schemes and projects have now been announced, and it's a question of execution. But what more can we realistically expect on reforms?
Very interesting that a business commentator at a business channel is out of ideas about what more reforms
I'm not out of
left.
ideas. I'm saying the sense we get now is that it's going to be execute.
Okay,
So what
okay.
more
No,
is
I'll
left
tell you.
on the reform
I'll tell you.
agenda?
I thought you were saying what else is left. You got the education sector. A lot of reforms still to be done there, both at the primary education level, but especially at the higher education level, where we have seen no reforms.
You
in
just
the last
heard from
20
the
years.
gentleman from Manipal University, sir.
I should say actually, and then also, there is also the issue of you have the second award also on medical, so you also have the issue of medical education. Both of those areas. Yeah, but the question that we heard, what the government would like the private sector to do, I would really like to reverse it and ask, what the private universities would like the government to do. I mean, that really is the crux of the matter.
I think they want clarity in terms of policy, in terms of, I think this whole business of the government intervening in terms of fee, what you can charge, what you can't charge for a private university, I think those are some of the issues that they're grappling with.
Absolutely. No, those are good points, and I think government is very aware of it, and hopefully we'll have some positive action on those fronts.
So we should expect big ticket changes for education?
Yes.
Okay. Should we also then expect big ticket changes in the textile sector, sir? Not only because Smriti Irani has moved to the textile ministry, but largely because it's been identified as a big employment generator by the government.
No, but both because you got a dynamic minister there too. Yes, no, that's an area in which I have been actually pushing very hard, not just the textiles, but labor-intensive industries in general. So we need the textiles, we need the footwear, we need the electronic industry, electrical products, all kinds of light manufacturing where you can generate employment. In the end, the greatest weakness of the Indian economy in the last several decades has been that it has not generated good jobs, well-paid jobs. And these are, predominantly, not exclusively, but predominantly these are jobs in manufacturing, labor-intensive manufacturing. That's where we need a big push. So there are a number of things we need to do, about which I've been talking inside the government, all the way to the Prime Minister. And there is general agreement on the kinds of things that need to be done. Let me not speak about these just yet, but that's an area in which we certainly work.
But do you feel confident, sir, today that this ambition that we've had, or the target we've had of achieving 25% of GDP for manufacturing, that is really going to be possible, over the next few years?
So it's a longer-term target, but at present also the NITI Aayog has been assigned to do the 15-year vision for the country. And I'd like to think that, in 15 years, we can get to somewhere there, around 25% of the GDP in manufacturing. And particularly, I hope a good bit in the labor-intensive manufacturing also, because in the end, we need to create good jobs.
Before I let you go, so I know that the NITI Aayog has now broken away from that business of putting a 5-year plan together and assessing the 5-year plan, because you believe that the need of the hour is much more dynamic policy making. And now you're going to have a 3-year assessment, a 5-year assessment, and a 15-year plan that you've put in place. You're smiling. Has my memory failed?
No, just a little different. Just okay. A little different, because we did drop the 5-year one. So it's going to 15-year vision, 7-year strategy, and 3-year action plan.
And you've just finished a review.
All right, so that was NITI Aayog Vice Chairman exclusively on CNBC TV 18 with that.